Hello and welcome to the ninth wealth management principle that we're going to talk about in this series, which is getting rid of credit cards. Now, you may not find this principle at many of the standard wealth management principles that you might study from other places, but this is something which I decided to add as a part of the wealth management series after years of experience and learning from my own mistakes as well as seeing what's happening around me. This is something which must be given focus on, and therefore I thought I would add it here. A lot of fun till you get the bill. So credit cards are a lot of fun. They have their own advantages as well. But the crisis starts only once you start getting the bill. If you look at these scenarios and at some stage of the life you tend to ask yourself such questions, then you are kind of moving into a debt trap that's created by a credit card. Credit is no more only a convenience but also a necessity, and you fear the credit card bill every month. So you fear to see that email which brings in the credit card statement, you fear to see the due date. You may not find yourself with enough funds to pay all the money by the due date, and then you're looking at ways to manage the fund or doing part payments and so on. So you fear the credit card bill, and that's a very typical scenario which indicates that you are either falling into the debt trap or already in the debt trap without even knowing it, which is so typical of credit card users. You tend to show off the latest credit card from your wallet. It's very typical. Banks keep coming with sophisticated and enhanced versions and naming brands to the credit cards. For example, a signature card or a gold or a platinum card. And sometimes it does feel good to show off these signatures and these brands to your friends and family and relatives and all, but that itself is an indication that the purpose for which credit card was being taken is getting defeated. You feel you tend to go beyond your means, and you have that feeling that sometimes you spend more, which you'll realize after you've spent it, and credit card becomes an instrument which allows you to freely spend more than what you already have in your bank account. You sometimes miss repaying the full amount, and there are occasions, even if it's not every month, certain months in a year, where you're unable to pay the full amount and you have to do a part payment and then do the remaining amount next month, or continue with the part payment even next month. So this repayment, if it's not done fully, is a very very big indication that you have fallen into the debt trap which a credit card creates. You feel that life has become more convenient but finances have become more constrained. So you feel the pinch of having enough cash in your hand, while you feel that convenience is definitely there whenever you have to buy something or go and eat out in a restaurant or go for movies, etc. So if you've got any of these indications, be very very careful, because most of the people fall into this trap without even knowing that they have fallen into this trap. So be very very careful about handling of credit cards. We're going to understand the ninth wealth management principle, which is getting rid of credit cards, and we've already studied the 8 principles earlier. The amazing power of compounding, paying yourself first, starting early, getting started, sharpening your financial saw, diversifying, choosing the 4 levers, and getting the right attitude. Today we're going to learn about how to get rid of credit cards and why should we get rid of credit cards, and how does that really help in building long-term wealth. Okay, let's first understand what are credit cards. So it's basically a plastic money for you. You get a plastic card issued from a bank or a financial organization, and this plastic card essentially allows you to spend money on credit, and that's why the name credit card, which essentially means you can go on and spend the money. Bank will give you a credit. You don't have to spend your money, you don't have your money to really buy something. Bank will give you credit and will allow you around 30 to 45 days to pay back that credit without charging anything. Now that's the fundamental concept on which works. So you spend now and pay later. Someone, which is in most cases the bank or the financial institution, gives money to you on credit, and that's what we just talked about. You also have a defined credit limit. Of course, you can't just go on and buy, let's say, anything worth 10 lakhs or 20 lakhs. Can't go on and buy a house or buy an entire car using your credit card. It has a defined credit limit, and it is different for different individuals. It is decided primarily by the issuing bank, and so the factors that go on in deciding your credit limit is, of course, your credit history, your credit score, your income, your savings, and so on and so forth. So this credit limit basically defines the upper limit to which you can spend using that particular credit card without paying any of those expenses that you're going to do. A credit card connects you to your credit score. So any expenses, any transactions that you do via your credit card, and then you pay the bills for them, goes as an input to your overall credit score that's developed by the government. If you are very regular in paying your credit cards, you can develop a very good score, but if you are irregular in paying your bills, it can go the other way around as well. Typically, a monthly bill is what comes to the user of the credit card, and he or she is supposed to repay for the credit taken during that particular month. You're allowed on 30 to 45 days to pay whatever bill has been presented to you, which gives a lot of flexibility to people. So credit cards do charge annual fees. In some cases, they do charge late payment penalties in case you are delayed paying as per the due date. They also charge interest charges if you're not going to pay the full payment. So whatever bank is given to you, they're going to charge you the interest for that. And mind you, the interests charged by the bank or any financial institution who has issued you the card is one of the highest across the industry. So you have to be careful not to paying interest charges, otherwise whatever little convenience or benefit you're seeing will just go away. On the positive side, they also pay you some reward points, cashbacks, and special offers. So I think let's systematically look at some of the positives and negatives of a credit card, now having understood what credit card is. Merits of credit cards, and this is where credit cards are definitely an advantage over the paper money that we use normally. Credit card allows you ease of handling of money. It's easy to carry in your wallet, and you don't have to really take a lot of cash and take the risk of carrying that cash. You can just pick your credit card and go along. It's also a good emergency management system by getting credit using your credit card and settling it later. It also allows you access to perks like cashback and reward points. So cashback you may have heard of in various schemes where you buy a particular gadget using your credit card, and the credit card issuing authority issues you a cashback of a specific value or a percentage. Normally, cashbacks are more an eyewash than anything else because you would not get the normal discount that anybody else would be getting, but you would get a cashback instead. Credit card also allows you with certain points called as reward points, which is essentially an incentive for you to go and use the card as much as you can. So each of your transactions are converted into reward points which are credited to your card, and it's also visible in your monthly statement of the credit card. Banks and institutions issuing the credit card then allow you to exchange those points with certain gifts or gift vouchers, or even for paying your credit card bill. So to that extent, it definitely is an advantage that it at least is allowing me 0.5% more space. It helps you build a positive credit score, and we just discussed that in the previous slide also, provided you are paying your bills on time every time, and that helps you build a good credit score. For people who do not have a good credit score or who do not have a credit score, many times use credit cards as a tool to build a good credit score, but you have to be very, very careful that you have defined expenses and within control, and you're able to repay the bills on time. Otherwise, this attempt can go the other way around as well. The statements that come from the bank or the issuing authority are very helpful in terms of your expense tracking. So in a single place you have all the expenses that you've been doing using the credit card listed down. Most international credit cards are valid across countries, allowing multi-currency transactions. So now with credit cards, typically Citibank credit cards, what we have seen is that they're valid across most of the top countries across the world and allow multi-currency transactions. Now, looking at all these merits, let's look at some of the demerits of using credit cards. The first and the biggest demerit is it converts you into an impulsive buyer. Your rational thinking on where to spend money, how much to spend, really takes a back seat because you feel that credit card is there, unlimited or a defined credit limit is available, and you can go and use that at any stage. While that's true, but if you were not an impulsive buyer, then you would definitely go and check how much money you really want to spend on a particular item and then may decide against buying the item. Chances of not buying it is definitely more when not using a credit card. Sometimes dubious transactions may need close monitoring of the monthly statement and follow up with the bank, and we have heard of multiple instances where credit card details are stolen and then people go on and do various transactions through the credit card, and it requires a very close monitoring of your statement that not any dubious transactions are happening, and if they are, you need to promptly report it to the bank, follow up with them, get that closed, and get the entire cycle closed. That's paying an extra attention to something which you would not really want to do, but you're required to do because of the current scenario. Credit cards act as a debt trap if you keep adding more credit cards, and it becomes like you take a lakh rupees on credit. Now when it comes to paying it back, you don't have the money, so you use another credit card to pay the first one, and then the second one gets due after, that's 3 weeks, and then you pay that particular card using another credit card and so on. That takes you into a kind of a debt trap. There are a lot of other hidden charges that may apply for a particular credit card. There could also be annual fees that the institution which has issued you the card charges from you. So you have to be very clear about the regular hidden charges as well as the annual fees that you're going to be charged once you take a credit card. It's better to clarify these things at the time of signing for a credit card than later. And we talked about the credit rating. If you're not careful about the credit rating, it can just go the other way around as far as your credit score is concerned. So any non-payment of a credit card balance or any delayed payments often results in a negative impact on your overall credit score. Once we know all the merits and demerits, what is the way out? We want the convenience, we want the luxury, but we do not want the negatives. We do not want the debt trap. So remember that all the merits of a credit card are doomed by a single payment miss, because the kind of interest you are charged and the penalty you are charged is so huge that you tend to lose on all the benefits that you thought the credit card would offer you. So my advice for starters on wealth creation is that do not go for credit cards, and if you have any already, get rid of them. And I would advise credit cards only to very mature investors who have a real grip on their overall finances, who are wealthy and are disciplined and committed in life, and who can take care of how much is being spent in a credit card. And even for those kind of investors, I would advise maximum one, or in the worst case 2 credit cards, not more than that. Anything more than that, we are not really able to understand the benefit of credit card. Instead of all this, use debit cards. So debit card is one tool where the money gets deducted from your bank account online. So at least from the perspective of getting into debt, it's taken care of because you cannot spend more than what you have. So you don't get into the debt. But of course, debit card also doesn't have some of the merits that credit card has, like reward points and getting a real credit of 45 days or whatever. But from a investment perspective, from a wealth management perspective, my suggestion would be to get rid of all your credit cards till you're mature and disciplined and wealthy, and then go for one or two good credit cards. To summarize, credit cards are a risky affair for starters in wealth management, and they're a very, very big trap, a debt trap if you're not able to handle them properly. And it's very easy to get dissuaded by the advantages of credit cards, but be very careful about what you're signing up for. Instead, use debit cards. You can use them just like credit cards. You can use them online, on merchant shopping, and everywhere. It's just that it won't have all the advantages of a credit card, but ease of handling of money and convenience and everything else is available for a debit card also. If you're a mature investor and a wealth manager, maximum one or two credit cards, not more than that. And if you're not, just get rid of all your credit cards. So that's it for the session today. You can write to us at help@manoj-arora.com, or you can visit www.manoj-arora.com. Thank you.